Hey there, future millionaires and market movers. Are you ready for some news that just sent shockwaves through Wall Street? Forget what you thought you knew about investing, because the biggest name in the game just pulled a move that left everyone scratching their heads. Get ready, because we're about to unveil the shocking truth behind one of the most unexpected stock plays of the year. Picture this. UnitedHealth Group, a healthcare giant, has been having a nightmare year. Their stock plummeted by nearly 50%, and they've been hit with everything from rising medical costs to federal investigations into their Medicare business. We're talking about a company that faced major setbacks, including the tragic death of its CEO and a cyber attack that impacted millions. Analysts were nervous, and investors were running for the hills. But then, out of nowhere, Berkshire Hathaway stepped in. Yes, the legendary Oracle of Omaha himself bought over 5 million shares of UnitedHealth. This wasn't some small bet. It was a stake worth about $1.6 billion. What was he thinking? This is his first investment in the company since he sold out of it back in 2010. It's like he's seeing something nobody else does. The moment this news broke, UnitedHealth stock skyrocketed by over 10% in pre-market trading. This is the power of the Buffett effect. When this investing legend makes a move, the market pays attention. It's a huge vote of confidence in a company that many had written off. It looks like Buffett is back to his classic strategy, buying a great company when it's down and everyone else is fearful. At the end of June, UnitedHealth stock price was about 13 times its expected earnings, which is much lower than its usual average of around 19 times earnings over the last 5 years. That means he saw a bargain. Now, while Buffett was busy picking up a battered stock, he was doing something else that caught everyone's attention. He sold more Apple shares. Yes, the tech giant, which has been Berkshire's largest holding for years, saw 20 million of its shares offloaded in the second quarter. Why the sale? Well, Apple has faced questions about its pace in the artificial intelligence race, which has led to some concern about its future growth. Even though Apple stock has struggled this year and Buffett has been selling it since late last year, it still makes up a huge part of Berkshire's portfolio, around 22%. So don't think he's giving up on Apple entirely, but he's clearly adjusting his positions. But that's not all. Berkshire Hathaway was busy. They also opened new, smaller positions in several other companies. They invested in a security products provider called Allegion, the outdoor advertising company Lamar Advertising, and the steelmaker Nucor. They also made bigger bets on home builders like Lennar and D.R. Horton, and even boosted their stakes in Domino's Pizza, Chevron, and Constellation brands. On the flip side, they completely exited their position in T-Mobile US and trimmed their holdings in Bank of America. It's clear Buffett and his team are constantly reevaluating where to put their money. Speaking of money, Berkshire's cash pile is now sitting at a staggering $344 billion. Imagine trying to find good places to put that much money to work. It's a huge challenge, even for the Oracle. Beyond Buffett's big moves, the market had a lot more going on. U.S. stock futures were mixed, with investors keeping a close eye on retail sales data. Expectations were that retail sales growth might have slowed a bit in July, from 0.6% to 0.5%. We also saw attention on the Michigan Consumer Sentiment Index, which was expected to show a slight improvement. These numbers give us a snapshot of how confident American consumers are feeling, and that affects everything from shopping habits to bigger purchases. And get this, Intel stock is on the rise because of reports that the U.S. government might actually take a stake in the struggling chip maker. This could be a huge lifeline for Intel, especially with the government looking to boost domestic manufacturing. It's a fascinating example of how politics and big business can intertwine, creating unexpected winners. But it wasn't all good news. Applied Materials, a major semiconductor equipment maker, saw their stock plummet by 14%. Why? Their projections for the current quarter fell far short of what analysts expected. The company's CEO even mentioned an increased uncertainty and lower visibility for their business in China. It seems like the global economic and policy environment is creating some serious headwinds for them. And some experts are even linking this shortfall to problems with Intel. And guess who else was buying into UnitedHealth alongside Buffett? Michael Burry, the investor famous for the Big Short. He bought both shares and call options in UnitedHealth. Burry is known for his often bearish bets, so his bullish stance on UnitedHealth, after its significant drop, is a powerful endorsement. Other big funds like Appaloosa Management, Dodge & Cox, and Renaissance Technologies also piled into UnitedHealth, further underscoring a growing institutional confidence in the company's turnaround potential. One more thing to consider, the latest inflation report, specifically the Producer Price Index, came in higher than expected. This raised some eyebrows and made people wonder if the Federal Reserve would really cut interest rates in September. Interest rate decisions impact everything from mortgage rates to business borrowing, so everyone is watching closely. So what's the takeaway from all this? Even the greatest investors like Warren Buffett are constantly looking for value, often in places no one else dares to look. They're not afraid to sell off parts of their portfolio, even their biggest holdings, to free up cash for new opportunities. And they're willing to step into what looks like a messy situation if they see the long-term potential for a rebound. The market is always moving, always surprising. Staying informed and understanding these big moves can help you spot opportunities, even when things look tough. It's about seeing the bigger picture and having the patience to wait for value to emerge. That's all for today's market breakdown. If you found this information valuable, please hit that like button right now. And don't forget to subscribe to the channel for more insights into the world of finance. Make sure to ring the notification bell so you never miss an update. See you next time, and happy investing.